Back.
Thank you, Ms. Pedersen, and thank you for your leadership on this committee and the important work of the legacy of your family you're carrying out in public policy. It's very important, and grateful to work with you. We'll now go to the gentlewoman from California, Mrs. Kim, for 5 minutes.
Thank you. I, too, would like to take a moment to thank Chairman McHenry for his leadership and the vision at the helm of this great committee called the House Financial Services Committee. It's been a pleasure and honor to work with you. Your leadership has also transcended the work of the committee when you led this body as a Speaker Pro Tem. And your unwavering leadership and perseverance during those uncertain times was very inspiring to me. And we all will be missing you and your leadership. But don't worry, I still have your cell phone, so you'll be hearing from me frequently. So thank you again. And I want to thank all of our witnesses for appearing before our committee today to discuss the innovation in the financial services industry and how it can improve the economic opportunities for millions of people. And so today I want to touch on the recent growth in the private markets and how technology could help investors from all backgrounds responsibly tap into those gains in the markets. According to Bloomberg data, over the past 3 decades, a number of publicly listed companies has fallen to more than 8,000 firms to just above 4,000. Additionally, according to Ernst & Young, the private markets doubled in growth from $9.7 trillion in assets under management in 2012 and are estimated to have reached $24.4 trillion by the end of 2023. So the question to you, Mr. Ward, in your testimony, you speak about broadening the reach of private capital. So can you elaborate on how aligning stakeholders on best practices and standards and modernizing the infrastructure can help the private markets, and how could technology play a role in all of this?
Thank you, Congresswoman. When we started CARTA 10 years ago, the thesis was venture-backed companies were investing in the best technology companies in the world in the same way that we finance the railroads. You would sign a bunch of papers with wet ink signature, you would receive a paper stock certificate, and you would file it in a cabinet. And one day, this company would go IPO, you would turn it in to the Depository Trust Corporation or a brokerage, and then it would become a modern investment. The CARTA thesis from the beginning has always been, can we take the same modern infrastructure in the public markets but start applying it to the private markets? And that will unlock both entrepreneurship as well as diversification for investors who want more diversification outside of just public equities and fixed income, but they can diversify into alternative assets. The more that we can bring technology and innovation into the private markets, because that's where innovation is happening, the growth of that sector will increase more entrepreneurship in the United States. And I think that's where we should be looking for a policy.
Thank you. Let me ask the question to Mr. McCauley. How do you envision tokenization of real-world assets transforming the way average Americans interact with financial products and services? Could you also describe specific use cases and potential use cases that are being developed?
Congressman, thank you for the question. I think the biggest example so far we're seeing in tokenization is with BlackRock's tokenization of their money market fund, where they've taken a traditional money market fund and made it representable on blockchain. This allows for 24/7 instant settlement. It significantly reduces counterparty risk if you can settle 24/7 and instantly. And I think it's a test case for what we can do over time, where more and more traditional assets can be registered on the blockchain and settled more quickly. We had last year, or within last year, a lot of celebration about moving to T+1. Which is still kind of funny that was a massive leap forward. I think there's a lot of further innovation that we can do there that will reduce risk overall in the system.
Thank you very much. Mr. Coley, Chairman McHenry has been working to enable crowdfunding for over a decade in Congress, and I view crowdfunding as a way for founders who would otherwise be overlooked by traditional funding sources to raise the capital they need. So can you explain why a startup would choose to raise capital through crowdfunding?
Yes, thank you for the question. There are actually two reasons why startups would raise via crowdfunding. One is to actually raise capital from their customers to help incentivize their customers and help to have them take part in the upside of the company. But the other one, which is more important, is venture capital is meant for venture backable startups. That means they're going for a very large outcome. Think of it like a Google or a Tesla or NVIDIA. But there's a huge a set of businesses that don't have that ambition and would still like to raise capital, and that's where crowdfunding is very important.
Thank you. My time's up. I yield back.
Gentlelady yields back. We'll now go to the gentlewoman from